overwhelming panic. The data confirms this. The widely tracked Fear and Greed Index is currently pinned at extreme fear. That anxiety isn't coming out of nowhere. It is directly tied to real-world geopolitical instability, specifically the severe diplomatic and military friction between the United States and Iran. Logically, that level of global risk should trigger a massive sell-off. Yet financial markets are completely ignoring the fear and printing green across the board. We can see this physical reality in global equities. Indian markets, for example, have surged strongly despite the pessimistic global mood. Speculative assets are reacting exactly the same way. The cryptocurrency market is currently experiencing a sharp, definitive rally. When sentiment screams panic, but asset prices steadily rise, it exposes a major flaw in how most people assume money moves. The disconnect happens because we confuse the emotional state of the public with the physical plumbing of the market itself. Sentiment indicators are strictly psychological barometers. They log human anxiety and doubt. They do not track tangible reality. This diagram shows the hard boundary between these forces. Human emotion is chaotic, but markets run entirely on the highly organized flow of capital. That capital operates on forward pricing, calculating expectations of what will happen months from now. Let's look back at the US-Iran conflict. A potential ceasefire doesn't solve every problem in the region, but it immediately reduces the future probability of a worst-case scenario. Financial markets do not require absolute peace to rise. They only require the calculation of risk to go down. The intensity of these upward moves is often dictated by how investors were positioned before the news cycle even shifted. When panic peaks, participants have liquidated their holdings, leaving massive cash on the sidelines and little active equity exposure. Selling pressure is completely exhausted. In a vacuum with zero resistance, even a tiny injection of new buying triggers a violent upward spike. Cryptocurrency provides a real-time, hyper-fast stress test for this exact mechanic. Digital assets operate with pure speculation and heavy liquidity. They act as a hypersensitive barometer, reacting instantly to the slightest capital shift and moving with the most aggression. A market surging during maximum fear isn't magic. It is simply the physics of new capital encountering zero mechanical resistance. The financial system is an incredibly efficient machine. It calculates probabilities coldly, never pausing to wait for human comfort before shifting direction. Notice how the capital wave surges first, while the sentiment wave stays completely flat. By the time sentiment finally rises and amateur investors feel confident enough to buy in, the capital wave has already peaked. The easy gains are gone. Extreme fear paired with rising prices is a definitive mechanical signal that the structural reality beneath the surface has shifted. True turning points happen in the dark. Capital moves towards the future long before the world has the courage to believe it.